Corporate finance practice problem using Excel. Payout ratio. Get ready. It's time to take our chance with corporate finance. Here we are in Excel. If you have access to Excel and would like to follow along, note that we're in the practice tab as opposed to the example tab. We have three different practice tabs here. We're going to be working three different problems of a similar nature, starting off with the payout ratio. Fairly straightforward calculation looking at the relationship between the dividends and the earnings and the amount that we're going to be retaining. This is an important calculation, however, to understand what this relationship will look like. We want to be able to express it different ways and be able to work into whatever unknown might be there with the use of our algebra. So we're looking at a situation or thinking about the earnings that we have, the amount that we paid out in dividends, and the amount that we're going to be retaining, and looking at ratio and percents to think about those items as well. Percentages often helping us with projections or comparisons or planning in the future. So we've got the earnings at the $250,000. We can think about that as basically the retained earnings for the business. We're going to say that we retained $190,000. That $190,000 does not represent retained earnings total. It represents the amount of the earnings in the current year that we retained. In other words, that we did not pay out in the form of dividends would then have to be included or added to the beginning retained earnings to get to that ending retained earnings number. So we're starting off with the earnings. We're gonna first calculate the dividends that were paid out here. So we're gonna look at the earnings over the year, which were $250,000 on the earnings. We retained then $190,000 of those earnings. Let's underline that, font group and underline. That's going to give us the dividends paid out, which is going to be equal to the $250,000 divided by the 100 and or minus the 190. So of the $250,000 we earned, we gave out in dividends 60, meaning we retained, then didn't give out. The 190 is the other way that you can think about this, right? That's the other way you might be seeing this information, given the dividends, given the earnings, and then backing into the amount that had been retained. So then we'll take a look at the comparison to the earnings themselves. So we're going to compare the dividends to the earnings, and that's going to give us the payout ratio. Payout ratio, which is going to be equal to the 60,000 divided by the 250,000, making that a percent number group, percentifying it, going to the 250,000 and font group underlining there. So we got the 24% as the payout ratio. So of the earnings, we paid out then 24%. That's going to be a common way to kind of think about it. You can see how that percent can be useful when you're thinking about what's going to happen in the future. Using some kind of payout ratio of the dividends can give us some kind of idea and allow people to get some concept of what the dividends may be or planning into the future. Now you can also calculate that. Sometimes it's easy to calculate it on the side here. So if I said the earnings minus the amount retained gives us the dividends, and then we take the dividends divided by the earnings, we get to that 24% on the side calculation. If we paid out 24%, let's do the retained. How much did we retained on a percentage basis? 190,000 divided by the 225,000. Percentifying that, or 76,000. The 76%. The 76% plus the 24% gives us then the 100%. Let's try it again. Let's do it again in another tab. Same calculation. We're going to go to Practice Tab 2. So we're on Practice Tab 2 on down below. We're looking at the payout ratio. This time the earnings at the $225,000 we retained of the earnings, basically the earnings being net income, retaining, meaning we didn't pay out dividends of $90,000. So let's back in then to the dividends that we did pay out. So we're going to start off with the earnings, which is going to be equal to the $225,000. We're going to say the amount that has been retained is going to be equal to the $90,000. That's going to give us the dividends. The dividends paid out, which is going to be equal to the 225 minus the 90,000, or the 135,000. Let's put an underline in the 90, font group and underline. So there we have it. And now we will compare this to the earnings. So comparing the dividends to the earnings at the 225,000, putting an underline there, font group and underline, gives us the payout ratio. Payout ratio, which is going to be equal to the 135,000 divided by the 225,000, making that a percent numbers group, percentifying it, adding a couple decimals, it looks like it's even at the 60%. Let's get rid of the decimals then. If it's going to be even, then that's okay. We don't need the decimals. We'll do our calculation on the side here. Same thing. We could say the dividends, 135,000 divided by the 225,000, making that a percent number group, percentifying it. And then we can also say, well, that means that the amount that we retained, 90,000 divided by the total earnings, the 225,000, would have to give us number group, percentifying it, 40%, 40 and 60, adding up then to the 100%. Let's take a look at practice problem 3 now. This is going to be slightly different, so we're on practice problem 3 tab this time. Now this time we're given the earnings and the payout ratio. And so if we're given the earnings and the payout ratio, we can then figure out the dividends, and we can figure out the addition to retained earnings are the two kind of things we can figure out. So we want to kind of know the relationship between these types of calculations and be able to use our algebra to, in essence, back into these. Now, the calculations we've been doing thus far, the payout ratio you can see is the dividends divided by the earnings, which is what we've done in the prior two, or you can think of it as the payout ratio as being the earnings minus the amount that was retained divided by the earnings, because earnings minus the amount we'd retained was the dividends. So we can do that calculation here. We could say, okay, this would be then if you were to write it out algebraically, we could say it's 0.15 is going to be equal to, and we're going to say, I'm going to put brackets around this, and it would be the earnings, which we're going to say is 1570000 minus x, which would be the unknown, and then we're going to take that and divide it by the 1, let's put a comma this time, 570, comma 000. And let's put some commas over here, comma, and comma. And so it could look something like that. And then, of course, you could solve for x using your algebra. If we were to use the same kind of calculation we saw last time in a table format, I'll just do the same thing and then plug in for the unknown. It would be looking like this, same calculation we had, which was the earnings. The earnings tab is going to be the 1,570,000 in this case. The amount that we retained, hold on a second, all right, I spelled it right that time, I think. I'm going to leave it there, is the unknown, and that would give us the dividends paid out, and the dividends that we paid out then would be that calculation, and then we have the earnings, which are going to be the same calculation here. And we have then the payout ratio. So in this case, we know the end result, the payout ratio of the 15%. And so I can say numbers, making that a percent. So then we can kind of back in to this number, right? Because this 15% should be this divided by this. So if I want to back into the dividend payout, it would be equal to the 15% times the 1,570,000, giving us the 235. I'm going to put an underline there, and then I know that this minus this would equal that, so I'm going to back in to the retained amount. The retained amount then has to be this minus this, and that'll give us the 1,334,500. And then you can basically double check these if you so choose. Let's go ahead and do that in the outer column. I'm going to bring this on down a bit. So then if you wanted to double check this, let's do this up here. We can say, all right, the starting number we knew, and if we use that number and subtract this out, we're going to say this minus this is going to give us that. That looks good. And then we're going to say that the earnings are equal to this. And then if I divide this out, this is this divided by that, and making that a percent number group, percentifying it. So it looks like double checking it looks like that looks correct. So then we can say, okay, well now we can figure out what the dividends are. Let's put the underline should be here. This underline should not be there, and the underline should be here. Okay, so now we can figure out the dividends. So if we have the earnings are going to be equal to the 1,570, and we got the payout ratio, which was given to us at the 15%. Percentifying that, we're going to go number group, percentify that, and that'll give us the dividends. That's going to be this times this, right? That's going to be the font group and underline. So we're recalculating this. This is one way that we can do it up top, kind of using the same calculation we saw before. Obviously, we're now calculating the dividends, which is the calculation that we did up there. And then we can take a look at the addition to the retained earnings. Remember, when we're looking at the addition to the retained earnings, we're not looking at retained earnings total. Retained earnings total includes the beginning balance. We're looking at what happened during this period, which is going to be the earnings less how much we paid out. So of the earnings, we have the earnings then, which were at the 1,570,000, and then we paid out in dividends. We paid out in dividends the 235.5, underlining that font group and underline. That's going to give us then I'll just call it the total down here because it's kind of a long thing. My fingers are on the wrong keys. And then we'll subtract that out, and that gives us our amount of the addition to the retained earnings to 1,334, which is our calculation that we kind of backed into up top here. So the point is, you can see this in a couple different ways. You can do it algebraically. You can put it in your table and kind of back into the unknown, which even you don't need to use. You could use goal-seek in order to back into that, but it's a fairly basic calculation. So you can even write this down if you learn the formula one way, you can write it down even if you're doing a test question and kind of back into it. Sometimes that's easier for me to see than actually the formula. It could be a little bit faster sometimes to do that, to write it down vertically, even in a test type of situation. Or you can basically think of the relationship in a different way, right? Figuring out what the dividends are and then understanding the relationship between the dividends and the amount that's going to be retained, which is clearly that the net income, then you could figure is either distributed out in the form of dividends, or it's going to be retained, held onto. If it's retained, it's going to be added to the prior year retained earnings when you're thinking about total retained earnings that will be on the balance sheet.